everybody. Welcome back to another episode of the Accommodation Show. This week, we're joined by the incredible, the wonderful Nick Massey from Proper Insurance. Welcome to the show.
Awesome. Yeah, thanks for having me, Bart. Excited to be here and share a little insurance and risk management knowledge to the crowd.
Yeah, indeed. And it's interesting, and I was very candid with you. I tried to be candid with you before the interview, saying insurance, that sounds kind of boring, but it's an important topic. And I actually get quite excited about it because this is one of the subjects that I don't talk about a lot, but that we get a lot of questions about is how do I make sure that I'm safe, that I'm secure, and I'm doing the right thing in terms of making sure that I don't have that much risk and liability. Now, I've heard about you, Nick. I've seen you at different shows. I've seen you on podcasts as well. And what I love about you is you've been doing this for a long time. You're not a new person into insurance, not a new person into STR, and you must be super passionate about it. Can you share a little bit about your history in this space?
Yeah, absolutely. So my formal background getting started in insurance about 13, 14 years ago was in some specialty trades around importing, marine cargo. I got really into kind of niche insurance markets. I then lived a life of a life insurance salesman for a little bit, which doom and gloom, as much as that is insurance, selling it based on that, I'm not a fan of. And then found my way into short-term rentals about 8.5 years ago when I started with Proper Insurance. So my background with estate planning and these kind of niche markets and the unique underwriting that goes along with them does play a lot into short-term rentals because they're just a completely different animal than it's no longer a residential condo or a residential house anymore. You have a lot of commercial type risks that come up that a lot of people don't think about. So kind of our big thing at Proper and one of our biggest enjoyments in our day-to-day is just getting people invigorated about learning new things around insurance and risk management. It's not, somebody gets hurt and wow, what's going to happen? How am I financially protected? It's opening up our eyes to things we don't really consider that often in our residential homes or our second homes that we weren't aware of that could be a potential risk and allows us as a whole, as an entire ecosystem across the world to be safer and better operators of these short-term rental places.
Yeah, that's amazing. And I remember when we were in the throes of COVID, then insurance got talked about an awful lot, particularly travel insurance and how it works. And if you're going to go somewhere, what you need to look out for. And I remember watching this and I'm like, oh, this is boring. This is like, oh, insurance. But then the one thing that I learned, Nick, that was almost life-changing. Like, is when I get travel insurance, you go, you buy it, then you read what's included. You're like, okay, cool, this one. And then if I get something stolen or it's got the medical, which is important, they said, don't worry about all the inclusions. Worry about the exclusions. Jump into the PDS, the product disclosure statement, and look at the exclusions. And all of a sudden, I'm reading the exclusions. I'm like, oh my God, okay, now I understand this policy way better. So every single policy I'm able to read in a far better way. And I think that's the same sort of thing. Quite often, insurance, like it's all about what you don't know rather than what you think you do know, right?
Yeah, insurance forever, and speaking primarily on the U.S. market side, because that's where I specialize. I'm not sure about how insurance is marketed, let's say in Australia or in Europe or anywhere else across the world, but in the U.S. It seems that marketing specifically is all smoke and mirrors, right? And so they're kind of painting this grandiose picture. They're using celebrities and footballers and you name it to like, hey, don't worry about anything. You're covered with the kind of messaging of as long as you use our product, right? And so the approach we like to take from a homeowner standpoint, travel insurance is one thing. We're also used to it. Anytime you buy a flight, it's right there in front of your face. Buy travel insurance, buy travel. And if you ever use any of the major OTAs, it's all there too, right? So, but from a home insurance standpoint, we're want clients to do that. Open up that policy. That insurance contract anywhere in the world, and any insurance contract that you buy is anywhere from 50 to 100 pages. And it looks super, super scary because it's all insurance jargon. And I don't know what this means. But the beautiful thing about insurance is that once you read through it one time, read through it a second time, and it'll start making so much sense. It is all written out, laid out there page by page, how things work and how things are covered and how you get paid out in claims, right? And so once you have an understanding of these exclusions, you can actually, before even calling and filing a claim, you can look and go, okay, well, I have this rotting deck board. Is that covered? Well, oh, I read in my insurance policy that dry rot and wet rot like that is not covered. So that's something that I need to deal with myself as a wear and tear or maintenance item. And so it is great to go and get that
Yeah.
education, but reading through it is the big thing. Just actually take the time, pour a glass of wine, and read that contract, and it'll start to make a lot of sense.
Over several nights. My best thing is doing it on a computer. I press Control F so I can find
Mm-hmm.
different parts in the document, and I'll scan through just the parts that I know are most relevant to my particular needs. Now, those are just some tips for me, but anyway, you're the expert here, so I'm going to let you kind of jump into it. Nick, I really need you to tell the audience when we're thinking about insurance for an STR, what are the fundamentals? What are the building blocks? What do we need to be thinking about when we're insuring ourselves?
Yeah, so it's a very loaded question, and there's a lot to go through. And ultimately, kind of the first step is communicating with an entity or an insurance provider that specifically specializes in this realm. So I'm going to start with some building blocks here, right? First, we need to identify where we're at and what we're looking for, right? So if I am a property manager that's managing 500 properties and I need to have insurance for my business, where do I start? And we can kind of think of that as like one pillar to the foundation, okay? And that property manager, you need to go out and you need to get specific business insurance for what you're doing. It's going to cover your office space, your commercial auto, your cleaners on staff if you have any, your computer machines, et cetera, et cetera. Then step number two is, am I a homeowner? Well, if you are physically the owner of that asset, you need to have insurance as well. Now, what's inherently unique about short-term rentals is you're not just an asset owner, you're also a business owner because you're running a short-term rental business. So when you look at traditional home insurance markets,
Can I interrupt? I'm sorry.
yeah,
The interesting thing is that especially when proper does come to Australia, you guys will need to look into that because of the way that it's classified here is different. So
mm-hmm,
short-term rentals, depending on where you are as well, it's the same as having a regular real estate investment, which isn't a business as such.
yeah,
So anyway, different categories as well, but that's something you need to consider, right?
yeah, absolutely. So specific to the U.S. market, and this is why insurance is such a hot topic in the U.S. market, is because of the way our insurance forms are standardized. So in the U.S. market specifically, if you're generating $2,500 or more in revenue, whether it's part time, occasional, or full time at your property, it is considered a business. And back to the exclusion conversation, that is excluded in your standard home insurance policies unless you get special endorsements, right? So you need to have that realization, and I think you need to have that realization now that if you're a U.S. based operator, it is considered a business in the world of insurance, and so you need to make sure you're filling and covering those gaps, right? But that's pillar number two, if we want to call it that, is the biggest component because all of this inventory around the world is owned by somebody, and that somebody needs to get insurance on it to cover for whatever exposures you need to have. And if you have certain amenities, bicycles or canoes or kayaks or a pool or a spa, you want to make sure you're getting coverage around those as well. And then we kind of move into this all insurance carries a deductible. And I know you did a show with Andrew Bate from Safely. They fall into this damage waiver category, which is a really great tool that I strongly believe everybody should have along with their home insurance to not only cover the small stuff, but also potentially supplement liability gaps found in the home product, right? And then the last thing is the travel insurance, which most OTAs are providing.
Can you before before we go there, can you just explain that a little bit more to me? That gap.
Yeah. So, to use our experience, most of our customers will purchase a policy from Proper with a $2,500 deductible, which means in the event of property damage, you, the owner, are responsible for the first $2,500 in damage. So, tree falls on the house, $10,000 in damage. We write you a check for $7,500. Claim settled. Move on. Way to go. But when it comes to damage caused by a guest, and specifically to our policy, we do cover damage caused by a guest, but you have that $2,500 deductible. So who's paying that first dollar? And what if it's less than $2,500? Are you paying for that out of pocket? Or are you using one of these damage waiver supplements that are out there to pick up that first dollar for you in the event of guest caused damage? Which is why I find them to be very important, because as insurance rates increase, people go with higher deductibles. And so that first out of pocket can be picked up by these other companies out there.
Very clever. Very clever. Okay, and then the last one, I think you said there were four.
The last bit's travel insurance, and that's not always something that you as an individual homeowner can go out and implement in. Now, when you're doing direct bookings and you have your own website and things like that, you do want to get in touch with companies like Generali Global Assistance, Fay Travel, Red Sky Travel, you name it. There's a handful of them out there that become part of your booking strategy. So if a guest has a last minute cancellation due to an illness in the family, you are not refunding or going against your cancellation protocol. They are claiming it against that trip insurance, just like every time you go to book an airline flight. So if you're just utilizing the OTAs, that's already built in. It's already there. And but if you're doing direct bookings or you're a property manager with your own website, then you definitely want to look at some of those companies to build in.
Yeah. All right. Cool. Well, so I find that you're quite eloquent at explaining this, Nick. I kind of feel that those those 4 points seem to make a lot of sense and make it really easy. Now, the property management side. So we're looking at insurance, which is going to cover the business, and then that can get quite complicated itself, right? Because we can have staff. We can have different risks and liabilities that we need to look at. So there's that business side that we're covering there. Then we've got the property itself. So that would also go into building cover and also the contents cover. Do you guys differentiate the two? Are they separate insurance policies, or is it just the same thing? And then that part which you talked about was the guest damage as well. If we do say that the short-term rental is a business but not a home, how do we kind of navigate that complexity?
Yeah, so the way most insurance is written for the physical asset, right, the property address, there's two parts to the cover. So you have property coverage and then liability coverage, right? So property coverage basics, something physically damages the physical tangible property, it's going to pay to cover that subject to a deductible. And then the liability is the big scary somebody got hurt and they sue me type thing, right? So you're always going to have that, and you're going to be able to select your limits of insurance. On the property coverage part, it's usually broken down into a multitude of different limits of insurance. So you start with your building coverage, and that's for us, the consumer, as well as someone like myself, the agent, to help navigate with you on how much limit of insurance you need to have to rebuild your home based on what the current construction costs are. And then you have your furnishings. We define them as contents. Some policies will define them as personal property. Some call it business personal property. It just depends on what kind of policy you're going for. And then the third facet is something called loss of use. But what's better for the short-term rental marketplace is loss of income. And they're not the same thing. But if you're looking at your contract and you see loss of use on there, that is a personal home policy. It's really specific to the U.S. market, again, not something you want to have in play because of those potential business activity exclusions. You want to see loss of rents or loss of income. So if something goes wrong with the home and you can't rent, you're getting paid that lost revenue while the claim's being situated.
Yeah, absolutely. And that's all. I mean, that's just a risk equation, right? To see, because obviously there's a cost that comes with that, and you want to make sure that you take that into account. Okay.
Yeah.
So are we saying that most of the time regular home insurance just would not be appropriate for short-term rentals, and you're probably wearing some risk with those policies when it comes to claiming.
You are, and that's really the reason like our company exists. If you look in the UK, Schofield's has specialty products around short-term rentals because of the way the UK insurance market is very similar to the US insurance market. And so when you just have a standard home policy, it's meant to cover your primary residence. So most of the time on the underwriting side, what they're looking at is they're under the assumption that you live there full time. So if the toilet starts leaking, there's somebody there full time who's going to go turn off the water and call a plumber and fix it, and hopefully not have substantial loss. And that's usually why those premiums are a lot less expensive. Whereas when we look into the short term accommodation markets and you have maybe some lapses in between bookings, and this guest just left and that toilet is leaking, and the next group of renters don't come in for 10 days, that water's been running and leaking all over the property for 10 days. Now we have much larger claim payouts because of this. And in turn, those insurance premiums are usually a bit more. So the problem with the standard home market always falls, at least again in the US, that it's one, not your residential property, so not your primary residence. They can deny claims because of that. Or two, that business activity exclusion hasn't been correctly enhanced or removed from the contract.
Yeah, wow. I hope this is getting some people to pull out their paperwork and have a look. At least so that you educate yourself, you know where you stand, and then you can make a
Mhm.
decision as to what kind of risk you're willing to take on. And then obviously from a legal standpoint as well. But the one question that I've got that really kind of strikes me as we talk about this, there's a feeling that a lot of the OTAs, and we're not going to name any specifics on this podcast, but a lot of the OTAs are developing insurance type products to kind of, in my mind, give the impression that you're covered. Don't worry about it, you're covered. What are we, Nick? What are we worrying about that isn't kind of covered, and is it as transparent as we think? I know that. So we've got those sort of two categories. We've got all the building stuff, and then the liability stuff. We've also got all the amenities, the hot tub, and whatever else,
Mhm.
and the furniture. Can you kind of help me navigate
Yeah.
what I need to be worrying about or thinking about?
Yeah, so the OTA insurance is a question that we obviously get, I mean, on a daily basis. And anytime I'm in any sort of media engagement or at a conference, it is a constant talking point. And unfortunately, insurance is ever changing. Contracts can literally change overnight. So, we won't get into the absolute nitty gritty. But the OTA coverage, if we're again thinking about these four pillars, right? So we have the property manager, we have my home, we have the supplemental, we have the travel. The OTA covers fall under supplemental, right? So in that tier, it is a supplemental product. You still need to have your own home insurance that covers and protects you. And again, these supplemental products are only covering damage during a rental period. Okay. So outside of a rental period, you still need to make sure you have
Oh
tier number
shit!
two
Really?
filled up. Exactly. So, although they are good in some cases, we've heard plenty of success
Did
stories.
I just swear?
Since they, yeah, since they do have good success stories. We've heard good stories from clients on our end when we do kind of compete and they go, well, you know what, I'm with XYZ OTA and they have this policy for me. And yeah, my rebuttal is always, yeah, but do they actually cover anything? Because it's not insurance with your name on it. That can be a problem. And they go, yeah, I actually had XYZ claim paid. It's like, that's actually a success story. That's great. But also on the other side, we speak with a lot of clients who go, I tried for months and months and months and months to get my claim paid and they didn't do anything. It just got lost in the abyss. They said tough, or they only gave me $60 and it was a $600 loss. Like, I don't really trust in it. So definitely proceed with caution.
Yeah.
Don't think that they are the end all be all going to cover everything for you. They are tier three. They are supplemental. And they only protect you during the booking period. And if you've had good success with it, awesome. If you haven't had good success with it, it's always going to be there when you book through those platforms. But there's so many options out there to get your own supplemental coverage as well.
So, so on that, why if we've read their terms and conditions and we're happy with their with what they've written and what they're offering us in terms of us using that platform and getting bookings from there,
Mhm.
do we need the third tier?
Yeah, so like I said, so tier 3 is always going to be that supplemental product, and the OTAs are always going to have that in place, and it's up to you to claim against it or not, and it's up to them to decide if the claim's going to be paid, because it's not an insurance contract with your name on it. If your name's not on it, you don't have policy rights, so
Mm-hmm.
you're kind of at the mercy of what they're going to do or not, right? Whether it's a liability or a property claim, and that can be scary to some folks. But even if you're extremely happy with the OTA service and the quote unquote free insurance that they give you, you still need to have tier 2, which is your homeowner's product. You still need to have, it's your responsibility to have that physical asset insured. And it's your responsibility to make sure that insurance is correct to your operation. So you need to have these open and honest conversations with your insurance agents, no matter where you're at in the world, to make sure you have the right product in place to protect yourself.
Gotcha. All right, and tell me, let's rewind just a tiny bit to property managers. I just want to kind of maybe put a final bow on our conversation around property managers and how they should be thinking about insurance, because of course they might have 10, 20, 50, 100. You go to the US and you go to VRMA and you ask in the room how many properties you manage. Most people are over 500. It's crazy. It's great.
Mm-hmm.
So you're managing 500 properties, but then do you need a division that's kind of making sure that everyone's got their right contracts in place, their insurance on their properties? Because surely, if a guest comes in and then something happens, and then where's the liability lie? Is the owner going to come after the property management company? What are some of the strategies that you've seen that might help uh, in terms of the way a property manager can think about this?
Yeah, so when I'm communicating with those property managers that are already quite established and sizable, um, they've been they've had issues and the insurance responds. Um, they haven't been any of the kind of more scarier issues that if you're listening to this, we can have that conversation in private. But um, basically how it breaks down is you as a property manager, you go and get your own insurance. It's going to have things like general liability. Somebody comes to your office, slips and falls. That's what that covers. Then you have things like professional liability. And that's if your engagement with a customer, say your property owner, is invalid or incorrect that causes them financial harm, they can sue you, right? Now, very, very rarely do we hear about a property manager getting into that type of lawsuit with their own client. What most commonly happens is there's some type of incident or accident at the property, and that injured party is now suing the property owner and the property manager. So how is coverage established? Again, focusing primarily on US markets, the primary cover for liability comes from the homeowner's policy. You need to be requiring that your homeowners list you, the management entity, as additional insured. Now, sometimes something will fall onto the property manager general liability based on what was the root cause of the accident, who's negligent. There's a lot of nuances to it. Okay. But in order to manage insurance, it can become very cloudy and difficult, and you do need to dedicate somebody in your office to go and obtain those what's called a certificate of insurance from the homeowner, showing that you, the manager, are additional insured. And if you haven't started yet, I highly, highly encourage that you get a folder open on your desktop or you get an Excel spreadsheet and you get all your property owners and addresses on there, which I'm sure you can just export out of your PMS, and then start putting effective dates, the carrier info, and the phone number for their policy that has you as additional insured. And then if they're not listing you as additional insured, you need to have that conversation with the homeowner, because more than likely it's written into your boilerplate contract with them that you, the management entity, need to be additional insured.
On a stat, okay, cool. Because then that goes also into the short-term rental insurance. So then you're So there is a bit of like need to make sure that your owners have got the right type of policy in place. How do we even look at the policy and make sure that it's the right policy? I mean, like, we're a property management company, we're not insurance people.
Yeah. Yeah. So the first red flag is if you speak with that homeowner and you say, Bart and Nick Management LLC needs to be listed as additional insured. And our homeowner comes back to us and said, well, my agent said that can't be done. Okay, red flag. You probably have the wrong insurance, and hopefully you have some strong referrals of folks you've met at shows. Us, we would love to do that, right? And get them on the right track. Um, so that's kind of step number one. Step number two is it is not your responsibility to make sure they have the right insurance, but they do have an obligation to meet the contract. So your contract should, at the very least, simply state that they're required as a homeowner to get $1 million in liability coverage and name your management entity as additional insured. And then you can wipe your hands clean of it. You're done. You did everything that you need to do to be within the contract. And if something happens at that property that's not covered, which is, most claims are going to be a slip and fall, so you're more than likely going to be okay. Um, then that's when your regular manager insurance is your fallback. Okay. But that's my advice, and that's what I tell everybody. You can't go and tell them what insurance to buy, but you can tell them they have to have $1 million in liability and name you as additional insured.
And just in case someone's watching this in a few years' time, the $1 million might be a different number.
It might not be the right number. Yeah,
So
maybe
just,
we might have to bump
it
that
might
up
not
to
be. It
2
might be
million.
5 or 10. Who knows?
Yeah, yeah.
That's right. So all good. Look, Nick, I don't want to make this episode too dense. I just wanted to give people those fundamentals, those building blocks, to help them sort of figure out how to think about it. And to understand that having specific insurance for their property is important. And it's really nice to also be able to differentiate where sort of the lines stop and end. And this is like a much bigger topic. And I imagine that if people want to really learn more, that one of the best ways is to reach out to you guys. Is that the best next step?
Yeah, absolutely. So for the US based listener, our phones are open. I got 24 staff members here, all educated by yours truly, so they can answer all of your questions. Um, Outside of the US, my website is a wealth of knowledge. There are blogs and all sorts of content on there. Um, to take a look. But the biggest thing is to simply don't get stressed out about it. You may or may not open a big can of worms, but it's a good can of worms because you don't want to open this can of worms when something, the provable, what hits the fan, right? You don't want to find out too late. So pick up the phone, pull out your insurance contract, probably in a PDF form, and have that conversation with your insurance agent to make sure you have the right stuff. And ask the questions. I have a hot tub. If something happens with the hot tub, am I covered? I allow dogs. If that guest brings a dog and the dog does, or injures somebody, am I covered or not? And understand what those are, because maybe based on what your insurance contract says, and I shouldn't say maybe, this is how you really need to look at it. If your insurance contract doesn't cover something such as XYZ amenity, you need to manage your risk by not offering XYZ amenity or upgrading your insurance coverage to probably a more expensive product, but one that provides the necessary protection for what you want to provide and offer at your home.
Yeah. And what I find fascinating about this, actually, Nick, is as we're talking about this, it makes you even more cognizant of how different it is in different regions. Even talking about proper and whether you guys are going to come to Australia as a market. And it's like, well, okay, there's just so many barriers or hurdles that you'd have to overcome, and a lot of understanding. You couldn't just come and start in Australia tomorrow. You'd have to do a lot of education yourself to figure it out, and the same with Europe and that sort of thing. So for everyone that's listening, take this episode as a building block for you to then go figure out your part of the research. If you are in the US, then reach out to Nick and get educated and figure out what you need, because you're at the end of the day, if you're trying to build a business, then this is invaluable information. Even if you're not building a business and you've got one or two short-term rentals and you just want to be a bit safer, a bit more secure, and know that that investment is not going to be at much risk, then also hopefully there's value. Nick, what's the website? Where are we? How are we finding you?
So the website is www.proper.insure, INSURE. There's no .com, so just www.proper.insure. And yeah, tons. We're putting out contents and blogs a few times a week, and a lot of it is general risk related. And a lot of it is also, from a U.S. standpoint, regulatory type posts and things like that. What's going on in communities across the U.S. So don't think by going to our website you have to get a quote. Definitely use it as a resource from an education standpoint, kind of a building block, no matter where you're at in your STR journey, new or otherwise. We hope we can be a resource for you.
Beautiful. Nick, thank you so much for your time. Thanks for joining me. It's a real pleasure to spend a bit of time with you and to get to know you and make the boring not so boring.
Yeah.
Don't be offended, please.
Yeah.
Look, wishing you a really good day, mate. Thank you so much.
Thanks, Bart. Yeah, same to you.